Ladies and gentlemen, good day and welcome to Lakshmi Machine Works Limited Q1 of fiscal year 23-24 earnings call hosted by NSDL. As a reminder, please note that the participants' line will be in listen-only mode and there will be opportunity to ask questions after the brief by the company officials. Should you require any assistance during the conference call and to raise questions, please signal the operator by raising hands. Please note that this call is being recorded. This is Samir from NSDL and we have with us Mr. V. Senthil, Chief Financial Officer, and B. Dhanalakshmi, Senior General Manager of the company. And over to you, sir.
Good afternoon. Good afternoon, everyone, and thank you for joining Lakshmi Machine Works Limited earnings call for Q1 of FY2023-24. We will have a brief about the overall performance of the company for the quarter ended June 2023, followed by an interactive session. I would like to clarify that certain statements made and discussions in conference call will be forward-looking in nature. To begin with, let me explain about the overall performance of the company. Then we will proceed to the segment performance and then consolidated performance. The financial results that have been posted on the company's website, and hope you have had the opportunity to go through the same. The company has achieved a turnover of 1,174 crores, which is 21% higher than the corresponding quarter of the previous year. This is in alignment with the peak utilization of our capacity in the business and continued effort to meet customers' orders. PBT stands at 122 crores for the current quarter as against 88 crores for the quarter of the previous year, which accounts for 38% increase in the profits of the company. I'll go into division specific now. TMD revenue for the quarter stands at 944 crores as against 768 crores for the corresponding previous quarter, resulting in 23% increase. The profit increased from 66 crores to 83 crores. Currently, we hold an order book of close to 5,300 crores and these have been lined up for execution over the near term. The ratio of sales of domestic OEM, export OEM and spares stands at 73%, 8% and 19% during the year. This reflection of the percentage of export sales is reduced is a planned approach to us decluttering the manufacturing process within India and increasing the reach to customers abroad. And we have made LMW international operational last year, and this is the reason we are seeing the percentage drop in overall export OEM in the standalone number. Now I move to LMW International. The turnover is rupees 70 crores for Q1. The office is now fully functional and this same period last year it was not operational for the full period. The order book on hand at LMW International is around 70 crores. In LMW China, we have clocked a turnover of 7 crores for the Q1 and for the comparative period last year it was 58 crores. There has been a significant push out of execution of orders this quarter. That is the reason we have a very low turnover. The order book on hand at LMW China is around 43 crores. Now let me take up MTD and Foundry division. The turnover of the division stands at 243 crores for this quarter as against 231 crores during the corresponding quarter of the previous year. Out of this turnover, the Foundry turnover accounts for around 12.5%, and that is with respect to the turnover. At MTD, we are still building capacity and we continue to invest in this business. With respect to ATC, the turnover of ATC is 41 crores for this quarter as against 21 crores for the same quarter last year. And we have been able to achieve operational efficiencies in the business and hence you see the profitability increase in this business. And now we can start the interactive session. Back to the moderator, please.
Thank you so much, sir. We would request the people who are in the attendees list to please raise hands if you would like to ask questions. After the communication of your name and unmute status from the moderator, that would be me, you can definitely go ahead with your question. We are waiting for people to raise hands. We would once again request the people who have joined here, if at all you have any questions, we can have your hands raised so that we can take up your question. Okay, so now we have a few people with their hands raised. The first person who raised the hand was Mr. Devansh Nigotia. Mr. Devansh, you have been unmuted. We can also have your video turned on if you like, and we can go ahead with your question.
Yeah, thanks for the opportunity. Sir, can you mention the order book and the movement between the order book last quarter and this quarter? And considering the spreads in yarn currently, what is our outlook for the order book for the year end? And in machine tools, considering the thrust on manufacturing which is there, what do we believe, what can be the most peak possibility in terms of revenue that machine tools can do over next 2-3 years? And will it be enough to navigate the cyclicality of textile machinery? Can it become that big? So some thoughts if you can share.
Thank you, Mr. Devansh. Yes, the order book, like I mentioned, stands at 5,300 crores, of which 4,900 crores is domestic and around 400 crores is exports. This is as of this standalone what I'm saying. Now, the same quarter, so the previous quarter, this was around 5,800 to 5,900 crores. As we know, the situation with respect to the markets has been quite tough. So the order flow has definitely been a challenge. And over the last multiple quarters, we have mentioned that while the project orders have got booked for quite some last 12 to 18 months, we would, as we go forward, would see more of upgrades and more of unitary machine kind of an order, what we call modernization. So those are the orders which are getting booked. So the order book overall has come down by around I would say around 500 to 600 odd crores. And if you net off the export orders which have got booked in LMW International, which is in LMW Middle East, you are looking at around a reduction of around 400 to 500 crores of reduction in order book for where we have executed more than what we have booked. Yes, the yarn spreads currently are not very healthy, especially for the standalone spinning mills, because of the movement of the price of yarn, and I'm sure our customers will be able to give a better explanation on this as to where they stand. But as far as the way we look at the order book, the push from our side is to at least try to book in as many as what we can execute, right? I mean, that is what we are trying to work towards. But it is quite a challenge. I mean, it is not only domestically, but even if you look at across the globe, be it in markets where we operate, like Turkey, or be it Bangladesh, or Indonesia, I think it has been, we should say it has been a challenge. Turkey, of course, apart from the fact that it has been a challenge on the economic front, the issue has also been that their market, the largest market for them being Europe, and it is really not helping with the higher interest costs and the generally the economy not doing that great. So there has been a lot of challenges around this, and that's where we are seeing that we are not seeing that kind of an order flow into the system across multiple pockets, not only domestic. But overall, the expectation perhaps is we'll have to wait through one more quarter and we see how things go. But we are like what I mentioned already, we are looking to at least get back in orders as to what we can execute. Now, with respect to the questions, are we going to become that big with respect to not going to ride the cyclical nature of textile business? I don't think it is possible. I think textile business, machinery business is always going to be cyclical. But I mean, we did put out the information that the idea is to kind of expand the segment of market which we can address, which basically means that the upcoming auto winder, that is a mission which will help us to go one step further in trying to expand the market, addressable market size, and thereby the turnover, bringing in more on the turnover side. So there are works which are going on to address and ensure that we are able to increase the market size, addressable market size. This is as far as textile machinery division is concerned. With respect to machine tool division, if I understood you right, the question was what could be the possible turnover which can go to. So let me, like I said, currently the utilization within the machine tool division is somewhere close to around 70%, 65 to 70% is the utilization of machine tool division's capacity. So yes, there is an upside to it, and we continue to invest in that business. We have brought in new machines, we have brought in new space for execution of more orders. So yes, there's definitely an upside potential for the machine tool business. But with respect to the order book, machine tool do not generally carry a very long tenure order book. Maximum we look at is only 2 months worth of orders. In machine tool industry, it's all short delivery machines. Perhaps few of them, if it's a special equipment, might go up to 5 to 6 months. But otherwise, generally they're within 2 months. So we don't have, we can't give a long-term order book. It's more of a short-term. I think I addressed both the questions. So back to you, moderator.
Thank you so much, sir. Thank you so much for answering that. Our next person with the raised hand is Mr. Ritvik Sheth. Mr. Ritvik, we have unmuted you, and can we have your video turned on for the question if possible?
Yeah. Hello, sir. Am I audible?
Yes, Mr. Ritvik, you're audible. Please go on.
Yeah. Hi, sir. Good evening. Sir, I have a few questions. Firstly, on the textile segment, Chairman Sir mentioned in the AGM recently that we're looking to introduce a couple of products in the textile market over the next 12 to 15 months, and that will significantly increase our market, addressable market. So, can you elaborate on this? What is the opportunity in India and globally as well? And who are the key players in this particular products? Second question is on the machine tool segment. As you mentioned to the previous participant also that there is a huge scope and opportunity. But if I look at the last 7 to 8 quarters, we are around 240 to 250 crores on a quarterly basis. So has the industry MTD segment as a whole been stagnant for the last couple of years, or we have lost market share in last 2 years? And last question is on ATC. Last 12 to 15 months have been really good, as you have been mentioning that there's a good order book and product acceptance is there in the market for our products. So what is the peak revenue that we can do from both the sides, composite and metallic side? If we have, is there a potential? What is the peak revenue from this segment on current capacity? These were my three questions, sir. Thank you.
Okay. I think with respect to the comments made by our chairman, there are on two products, right? It was the winder and also the airjet. With respect to the timelines which he had given, it is more of 12 to, I think he also mentioned up to 2025 or so. With respect to overall market, he had also given that it is close to a $2 billion market, addressable market size for these machines. The competition for these machines are mainly 3 to 4 players internationally, similar to what we have on the spinning or spinning segment. Or I would say perhaps even a little bit lesser. It's only 3 players, some from the West, some from Europe, some from the East. And these products would get rolled out. First would be the auto winder, which would get rolled out, followed by airjet. We will keep you informed in terms of when the commercial launches of these products will happen. As of now, the products are being installed in few locations. But commercially, as it launches, we will definitely inform in the similar sort of meeting. We will definitely put that information out. With respect to machine tool division, the observation is right. I mean, whilst we have a consistent performance of machine tool over the last 7 to 8 quarters, it is not that we have lost market share. It is pretty much we are able to retain the market share. The market is, I would say, we have gone through a little bit of an ups and downs, in terms of auto sector. Then there has been a pull in terms of new capex for EV segment. So various things are happening in the market. But general consensus between all manufacturers is that the India story in terms of manufacturing is going to be very strong. I think that as a consensus is there among every one of us. The PLI schemes, if you see, almost out of the 11 or 13 odd sectors, 6 of them are core manufacturing. You can look at it as a core manufacturing, which is going to help. So overall, it is a very positive sign, and that's where, like we said, we have been always building capacities to address this. So I think the market should grow over a period of time. But as of now, these are the numbers, and this is in alignment with what the market is. So on the turning centers, we have a market share of anywhere closer to 25%. And in case of machining centers, it is in single digits. It is a little bit tad less than 10%. So that market share still continues. With respect to ATC, we always maintain that yes, we have order books. It is only a matter of push out and pull in. And it so happens that last 2 quarters, there has been a lot of pulling of product components. So we have a lot of material, we have a lot of orders. So it's been all pushed out, and post-COVID, we have been discussing it for quite some time. And now there's a lot of demand, and that is the reason they are able to give us what they call in the trade, they are calling it surge orders, where there is a sudden surge of demand for certain components, what we do. And we are able to take these orders as they come in. So that is why you see that the turnover has gone up. And I would say this is a sustainable turnover. And again, in this particular case, this turnover, what you see here is only reflective of metallics. Our composite division, where we have invested closer to around 60 to 70 odd crores, is still to give us turnover. And I think that turnover will also get added as we go along. So as of now, most of it is on the metallic side, where the order books have been quite healthy and we are able to execute and with almost closer to full capacity utilization on the metallics. I think that answers all the three questions. Back to you, Mr. Moderator.
Thank you so much, sir. Thank you. Going ahead with the next person who has raised the hand for a query, we have with us Mr. Dhaval Shah. Mr. Dhaval, you have been unmuted. We can also have your video turned on for the question if possible.
Hello, sir. Sir, I just have one question on our CNC business, CNC machine. So there are some customers or there are certain factories which say that we make our CNC machines on our own. So what sort of risk is there for our business? Like, maybe they could be assembling on their own, or they could be making it from scratch. I don't know. But there are certain manufacturing companies who say it. So I just want to know your thoughts on it. Am I understanding something wrong, or what is it?
I think your question, basically, if I understand it right, is that what about companies which are building up their own machines? Yes, I think if you are technically sound and capable, it is possible, and those type of machines we call SPM, special purpose machines, because it will kind of execute that particular work. Specifically, it will do one type of an activity, or if you have multiple, or if you build multiple SPMs, you will be able to execute perhaps the entire machining what you want. But however, the level of quality what is required to be built into a mother machine, a CNC machine, is quite high. And that's why you see along with us, there are a handful of suppliers who we supply within India. And if you actually see this market little bit more, which also was addressed in our AGM, one of the questions basically was that how big is this market? Machine tool industry is very large. So we are looking at close to 12,000 crores to 16,000 crores kind of a market size within India, of which 40% is manufactured, the balance is imported machines. So from the size of it, you should be able to derive the conclusion that it is not, if it was that easy to kind of manufacture things by themselves, people would rather manufacture rather than import close to 6,000 to 8,000 crores, or buy close to 4,000 to 5,000 crores within India. So it is not that it can't be done. Technically, it is possible. And some companies, very good, large, where they have a good tech support, they do it. But most of the industry would still buy out a machine because it comes with warranties, guarantees, and also post-sales support. And today, the concept of IIoT is also built into these machines. We are able to look at if there's a particular level of, let us say, accuracy which you require, and you are not able to get that kind of an accuracy, we are able to tap into the machine from a remote location and support that activity as well. So a lot of things get built into these mother machines when we do it at a larger scale, and to meet a lot more requirements, varied requirements of a customer. So you can take, it was more of a general size of the commodity determines the machine what they buy, and they can put in multiple components within that particular machine. And I mean that's the answer for the SPM versus what we do in terms of a regular CNC mother machine. Back to you, Mr. Moderator.
Thank you so much, sir. So with that, we do not have any more questions. We do not have people with any more raised hands. Okay, now we have two more. So proceeding with the next, we have with us Mr. Sarang. Mr. Sarang, you have been unmuted. Can we have your video turned on for the question, please?
Hello, am I audible, sir?
Yeah, you're audible, Mr. Sarang. Please go on.
Yes, good evening, sir. Good set of numbers. So, how do you see the growth for the year in each of the segments, and margins, can they sustain the rest of the year? So that's my first question.
And second one, Mr. Is that all?
So my second question is, so how is the commentary from your clients, customers? Initially, our spinning mills had delayed their capex plan. So what are you hearing from them right now?
Okay.
Yes.
With respect to the growth in each segment, I think I've already touched upon. As far as TMD is concerned, we are very clear that we are working on two of the new products which will broad base our addressable market share. That will be the things to look forward to. Second thing, within TMD, export is something which we are now very clearly focusing on with our own assembly facility, which is there in Middle East. We are trying to focus not only for the TMD but also in the machine tool. Trying to give a very specific focus to our customers with this particular expansion and a foot outside the country as far as assembly facility is concerned. While we did have LMW China, over last post-COVID, there have been a lot of challenges which we have also shared in the past on the conference calls. And then a decision was taken to declutter and within India, and also to address the export market very clearly. And that was what we had done last year with establishing this facility. So I think these two are the clear growth engines within TMD. And as far as the margins are concerned, I think we over the last year, our last price revision, what we did was December 21, and subsequently through the war and the prices going up and then subsequently partly coming down, we had not made any changes because we were clear that it was going to throw a lot of challenge to our customer and customers, right? So finally, to overcome all the incremental costs, we had revised our prices in the month of May, and that is going to some extent address our margins. So we have seen our margins incrementally creep up. I think it is closer to 11% at TMD. I think it would creep up by another 2.5%, subject to all the new prices coming in. And we are also, of course, working on cost-saving initiatives. I mean, that goes without saying. With respect to machine tool division, I think that question was also, perhaps I preempted the answer there, where we said we keep investing. Perhaps I'm repeating it for the second time, but we see that there is a tremendous potential. The only question here is the making available the models which would be in demand for the market specific. So we are talking about when we talk about engineering, pump and valve, Today we are talking, since we are exporting to the Middle East market and we started since last year. So we are talking about oil and gas industry. So we have to create machines for these markets, these addressable markets. So that is the growth initiatives as far as machine tool. That is A, to build capacities, and second, to build machines for different markets. I think these are the two comments as far as MTD and machine tool is TMD and MTD is concerned. ATC, we have already mentioned there are order books. It's only a matter of execution, which we covered. With respect to the customers, yes, I would say it is very challenging. In fact, it is not easy with the cotton prices going up and down. But more than me, I think talking to our customers, you will be better placed to understand the challenges what they face. One is on the price, and second thing is also on the market itself in terms of the export markets, the final product, the export demand for the final product. All those things definitely are challenges, and we know these challenges, and it is going to take some time to overcome this. And that's all I would like to comment as far as the customers and customers issues are concerned. Back to you, Mr. Moderator.
So thank you so much. Sir, we have with us Mr. Devansh again with another question. Can we take him again?
Yeah, please.
Mr. Devansh, you have been unmuted. Can we have a question with the video turned on if possible?
Yeah, thanks for the opportunity. There's some issue with my video, so that is why it's not on. Yeah. So, sir, in machine tools, earlier we used to mention the opportunity size of around 8 to 10,000 crore. I think 2-3 years back. Now with these launches and the diversification in terms of categories that we are entering, some EV initiatives also that we highlighted, and we mentioned right now in pumps and valves in oil and gas and in the Middle East also we are looking to build few machine tools. So now how do you look at the opportunity size considering the current basket of products that we have, and has it grown significantly in comparison to last 2-3 years? Some thoughts.
Definitely, I think, Mr. Devansh, good question. I think many things have happened in 3 years, right? I mean, we have gone through two major things. If we talk about, one will be the strong focus given by government's PLI initiatives. Second thing is also in terms of post geopolitical changes, the +1 factor or -1, whatever they call it, right? I think both are definitely giving us an opportunity because companies are relocating, engineering, manufacturing is relocating. So I think that is very clear, and that's where you're absolutely right. Perhaps 3 years back we were talking more about 8,000 kind of a crore, 8,000 to 10,000. Today we are talking about 12 to 16. So definitely the market itself has grown, and we are seeing it from. I'm sure 3 years back we never ever had the export of electrical electronics in such large manner. So yes, the fabric of manufacturing is definitely changing. And that's where I mentioned that we are all aware it is changing, and we are also focused on how best to utilize it. Now, is it changing at a pace at which we are all wanting it to? That is a secondary question. But yes, the market size has increased. The market is and it is set to continue to increase. That is our take on what's kind of happening.
So thank you so much for answering that. The next person with the raised hand is Mr. Amit Shah. Mr. Amit, you have been unmuted. Can we have your question, please? Mr. Amit? Mr. Amit, can we have your question, please?
Yeah. Yeah. Sir, firstly, on the executable timeline of this particular order backlog. So last year we did almost 4,500 crores kind of a revenue. Our order backlog has come down to 5,300 crores. So what is the timeline of execution of this particular order backlog? Secondly, any influence so you launch and you register the limit will get the
Sir, extremely sorry to interrupt, Mr. Amit, but we cannot really hear you. Mr. Amit, I mean the voice is breaking.
existing product portfolio growing in FY2025. Before we are given the
Mr. Amit,
Sir, we could not hear him. And
I mean, I could still make out the first question. What his question was basically the turnover of last year being 4,500 odd crores with 5,300 crores of order book. When we can execute, will we be executing? I think the entire order book. I think the question to that is it doesn't work like that, Mr. Amit. What happens is that there's a churn in the order book. We execute, yes, the orders today, what is there would get executed over next 8 to 12 months. And there is a pull of orders because this is only, we are talking about the local orders. We do get in export orders, then we got spares. You can't simply go with a basic division of a number of 5,300 because your 4,500 is made up of MTD, foundry and ATC all turnover put together. We are talking about an order book of only TMD. So yes, but as of now, with any order what we take, we are able to execute within 8 to 12 months. I think rest of it I couldn't hear, Mr. Moderator. Yeah.
Thank you so much, sir, for answering that. If at all there is something, Mr. Amit, that wasn't audible or the question was registered.
Mr. Hemang is there. I think,
yeah. We'll take Mr. Hemang, but if at all Mr. Amit's question was not answered or not registered, we can always, have him mailing the question. That will, I believe, be answered. Going ahead, we have with us Mr. Hemang Kotaria. Mr. Hemang, you have been unmuted. Can we have your question, please?
Hello. Yeah, good evening, sir.
Good evening, Mr. Hemang. Please go on.
Sir, what is the reason you mentioned about lower turnover in China subsidiary?
The push out of orders there, Mr. Hemang, see, they're all certain projects. Okay. And unlike here with a lot of combination of unitary projects and things like that, there it is more of a capacity getting allocated to a few customers because our capacities are not huge like what we have here. And since those particular orders got pushed out, there were no deliveries happening. So that has been the challenge at China.
So thank you so much for answering that as well. I believe we have no more raised hands. Okay, now we have what? We have Mr. Anirudh. Mr. Anirudh, you have been unmuted. Can we have your question, please?
Hello, am I audible?
Yes, Mr. Anirudh, please go on.
Good afternoon, sir. Sir, is the TMD or rather the MTD capacity utilization ever likely to come close to the 100% mark? Because CUF is has been there for quite some time. And when we say we are investing, but the needle on the time to make big ticket investment doesn't seem to be coming. So I'm trying to work it the other way around, that when will it be that at what level will you have a slightly bigger push, because your commentary has always been quite positive as far as PLI and the opportunity is concerned. But we've been very cautious as far as putting more investments into this division is concerned, which, as another participant said, could to some extent offset the cyclicality of the TMD. So when can we expect the CUF to go up to, let's say, 80-90%, and or alternatively, when do we expect some big ticket investments that you may make into this division?
So I think that's where it is important that we keep investing, right? To answer it, when we see that it is coming up to 80%, we will invest more. Now, what kind of investment goes in are only two. One is this requires space, assemblies, and it requires certain heavy machines. And if you follow through this division over the last perhaps 4 years, you would see that the turnover has consistently gone up. Now, that is because at every stage we anticipate what is that we should always invest further for. So the idea is never to come to 90% or 95% and then invest later. The idea for us is to keep investing and to ensure that there is enough headroom for us to grow the turnover all through. And it is not too difficult to anticipate this and plan for this. Yes, Mr. Devansh.
So going ahead, we have Mr. Devansh once again. Mr. Devansh, we can go ahead with your question. Mr. Devansh.
Yeah. So can you share your outlook on CapEx in TMD as well as machine tools for the next 1 to 2 years?
No, I think as far as CapEx is concerned, the current 2 years, for last 2 years, we've been kind of investing only in balancing machines as far as TMD is concerned, and we continue to do that, modernize, balance. So that's as far as TMD, and as far as machine tool is concerned, like I said, as we keep hitting the 80% mark of utilization, then we keep investing for bringing the capacity up further. I think that's the way we look at long-term capex in both of these units. Of course, the new machines which will get introduced will have its own requirement as and when, and if at all anything new of that requirement is there, we will address it. Thank you. I think no other questions, Mr. Moderator. Yeah.
Yes, sir. I believe all the questions have been answered. We do not see any more raised hands from amongst the attendees. So once again, sir, over to you.
Yeah, I think that's all from our side. I think thank you very much for everyone for attending, and we'll see you next quarter. Thank you.
Thank you so much, sir. Thank you so much, sir, for answering all the questions. Thank you so much, all the attendees. Thank you so much, everybody, for being here at this earnings call. Thank you so much. Thank you.